Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments. First off, money flow. I'd say the latest estimates now have um, the managed funds. I'd a little short or maybe flat wheat at this point. Um, they had been short a chunk, 60, 70,000. They bought most of that back now on this explosive rally. I'm talking Chicago. For the corn, probably long 100,000 now. Beans probably long a little over 100,000. Still long meal and oil, and adding to those longs. Uh, the driver, it's just weather, pollination. You've got a new high, a new 3.5 year high, contract high for Novi beans. Almost hit 1250 last night. 1241 was the old high. So to go from 41 to 48, is that just more short covering or people trying to get position for the next leg up? I don't know. I uh, we have used this rally to get to I think what's a good level of cash sales and both corn and beans. If you're in the camp that you think that we're going to go another dollar or two higher, there's nothing stopping you from buying cheap calls. I hate buying calls after a $1.40 rally in the beans, and a 70 cent rally in corn, 60, 70 cent rally in corn. But go out there and spend a dime. You don't have to spend a lot. And this is, the last week in July. If August turns out where we really have another weather market, you want to participate, that's fine. Don't spend a whole lot. Or if you're buying futures here, make sure you've got very, very tight sell stops, because when this turns, and historically it turns, it just takes a shift in the weather. It can be the old analogy, right? We go up the escalator and we go down the elevator shaft. So um, that's the risk at this point. If you look at wheat, again, 707, 710 and SEP, new contract high for that as well. And I did run the long-term continuation charts for everybody. That was in last night's letter for Chicago wheat. There's some old highs there going all the way back to like 720 and then above that. But absolutely positively, wheat's being driven by what's going on in uh, Russia, Ukraine. Crude oil, people seem to have forgotten that crude oil, doesn't like it when tensions flare up again in the Middle East. 10, 12, 14 days ago, we were at 68 bucks. Now we're at 92. And that's going to be something to reckon with, because that's going to pump up the whole idea of inflation. Inflation, here comes inflation. If that happens, it's another reason for managed money to chase commodities. A little bit of lower in Kansas City wheat, though. That's interesting. You have Chicago higher, Kansas City higher, and Minneapolis, Chicago was a penny and a half higher. Kansas City's down a penny, and Minneapolis was also down a penny. So watch that spread. Watch the KC, Chicago, and the Minneapolis Chicago spread if you've got those trades on the books. And in the cattle, his cattle ready to fall off a cliff? I don't know. We've taken out key support here in fat cattle. There's still an old low that we may test in feeder cattle if we go down to the June 4th low at 336. We're trading right there right now. Very, very, very technical. Um, People are probably getting sick of hearing it, but that's really what's driving us right now. And I think you're getting to the point now where a lot of the long positions that the managed funds had held, because they've been long forever. They've been betting with the rancher forever. They're taking some of that money off the table. Stock market's a little bit lower, 600, 700 points. You have to remember, when you're at 52,000, a thousand points isn't what it used to be, right? And if we get a 10% correction, that's 5,000 points. So, we've had a high of 53,000 and change. 53,656 was the high. So a 10% or 20% correction, you're talking about big numbers. I don't know if you can get that upset anymore about 600 or 700 point moves. And same thing for the S&P 500, sitting here at all-time highs. People love, there's a whole industry out there for the last 40 years been calling tops in the S&P. So is 7,600 now the top for the S&P? Well, it's been the top since June 2nd. So if we can't take out 7,600 here, people going to be saying, okay, now it's over. It's finally over. Remember, they said that back in March when we went down to 63.50, and that was 1,200 points ago. So, all right, guys, that's it for the day. Be careful out there. Use this rally if you are long grains. Use it to do some marketing and use it to get a substitute put. At some point, this market could turn. It would be nice to have the highest floor that you can. And the justification, if we've rallied $1.15 in beans, is that worth a 10 or 15 cent put? You have to let me know. Beans have rallied 60 cents. Is that worth spending 8 to 10 cents on a corn put? You have to let me know. I would say yes, because again, at some point when this thing turns, you are going to want to have the highest floor you can. And nobody, I mean nobody, can sell the high. We want to be in the game with our long position. We want to sell when we want to sell, not when we feel like we have no other choice. So reward the rally and have a good day. This is Chris. Take care.